I thought the day after Nvidia had its squeeze that we would actually see a bit of a drop, but that was not the case. We kept on going up. You can see that more in the Nasdaq than the S&P, but still, taking a look at the S&P close here on Friday, you can see strong close. Technically, it looks like it just wants to go up to the next resistance. Obviously, I don't agree fundamentally, but who cares about that? Technically, it's strong. Stronger than it's been for even stronger than you can say on Thursday the 18th. Just very strong close. If we look at the Nasdaq, I mean, wild stuff. I thought that this was a blow off top, but I didn't mention that it was actually a very strong close. And look what happened the next day. It kept going. I thought that there would be a massive reversal actually, but that was not even based on technicals, just sort of psychology, I guess. But no, look what happened. Smashed up, really strong day, 2.5% on the Nasdaq, closed at resistance. I mean, I drew this line long ago. I just had no idea that it would actually reach the next day. So that's what happened on Friday. I mean, I actually just drew this line just now before doing the video. As I took a look, obviously this is the next resistance. To me, there's no point. I mean, I'm going to ignore this gap. We could get there and retrace, and it could act as a level, but I'm just going to leave the obvious one. I can't imagine. I've been proven wrong already. I didn't think we'd go this high, but that's what a squeeze is. Could we go up there? Of course, it's possible. I really can't imagine. I know that the UK, the EU, German markets have reached new highs, but I mean, for me, this pure complacency. This is just like wave two, wave one down, wave two bounce. I expected wave three to kick in already. Fine, let's have a little blow off AI short squeeze. But anyway, technically that is the next major resistance, and there's only one after that. That's the absolute highs. Obviously, this is a rough level, but can't imagine that happening. Support is, well, prior resistance. I will keep extending this ascending because of the day, and it will come. The day we close below the ascending is the wave three commencing, and the S&P have already got that. So let's see. I mean, these two markets, the S&P and the Nasdaq, very, very strong. And you look at the Dow, nowhere near as strong. Lower highs, we're nowhere near the highs from over here, nowhere near the squeeze that we've seen in the Nasdaq. So for me, if we see any retracement in the S&P and the Nasdaq, straight away we'll see the weakness in the Dow, probably making new lows here. So yeah, let's see what happens. I'm just looking for the move back down. I think it's a lot more obvious that we are likely to see a drop now that we've seen this massive squeeze play out. And I'm not sure. I think Nvidia, did they come out with something on Friday after hours? Did they do some sort of a small dilution equity raise? I don't know about that. I think I read something like that, but I don't even care. I know the valuations are absolutely ridiculous. I know it doesn't matter, but I think to have that in the background could contribute to a serious retracement. So I'm really waiting for wave three. And I think interest rates going up, which we're going to get to in a second, is what will encourage that move. The Russell here, just like the Dow, very weak, very weak. The Russell is a lot weaker than the Dow, obviously, because you can see the Dow's all the way up here, far off its lows, but the Russell pretty close to its lows. But the point is that both of them combined are so much weaker than the S&P and the Nasdaq. But yeah, the Russell, small bounce on Friday. I mean, look what its day was like on that Thursday, that squeezed Nasdaq day. There's such a divergence, between the Nasdaq and the Russell. It's yeah, it's incredible. But anyway, it got a bit of a bounce on Friday, but that's nothing special. We're really towards our lows. So if we see any reversal, straight away we're flushing down here, and we're just, making new lows at the second last level of support before basically hitting the absolute lows of the bear market. So the Russell is just 2, 3, 4 days away from breaching its second last level of support and then hitting its absolute lows. So yeah, the Nasdaq and the S&P much stronger than the Dow and the Russell. And the absolute opposites would be the Nasdaq and the Russell. Let's look at the banking stocks. They look like the Russell, don't they? just a small bounce, absolutely no indication of the Nasdaq squeeze in the banking ETFs. And we're looking at the XLF here, so small bounce. I think we're just going to go lower. We're going to close below this support and then straight back down here. I think the banking stocks will reach lows, the bear market lows before the Russel. The Russel will follow. The Dow Jones will start to move lower, and then we'll get the S&P and the Nasdaq coming all the way back down, closing below their ascending and flushing down. Very hard to imagine that happening right now. But that's the way these things happen. It starts with baby steps and then you get massive, massive flushes. So I expect the baby steps and the flushes to first take place in the banking ETFs. And then, downstream towards the S&P and the Nasdaq. So that's the XLF. Let's look at the KBE. I would even argue that maybe the KBE and the KRE are looking a little stronger than the XLF recently. But, when you zoom out, they've flushed a lot more. Maybe that's why the bounce has been a bit stronger. But look, a small drop. To be honest, it looks okay. The KBE and the KRE, they look absolutely identical. So I'll speak about both of them in conjunction here. But look at this downtrend line here on the KRE. The KBE, it's not as... actually, it is. I just didn't draw it. It's probably this. You could have a small pop and then a close above here. So it's set up for a nice pop here. I just don't think it will have the catalyst to make it. I don't think you need the markets to go up, or you need certain small and regional banks also, but you need really the banking sector to go up. And with interest rates going up, and also with the markets having done the major move that they've done, I just think it's just too late, So let's see. I've at the back of my mind, I'm thinking, look, it's really possible because it's the type of chart I love to play normally, something that's been destroyed, and then it's starting to look for a nice setup. And for me, the best setup is a bull flag, really like a breakout with ascending trend line. But I just feel like it doesn't have the fundamental backgrounds to endure such a move. You need the markets to be with you, and you probably need the whole sector to be with you. And interest rates going up isn't going to help the sector, and the markets have already squeezed. So I do respect the potential and I'll watch it, but I just feel like it's going to fail and go back down again. And if we do go back down again, watch out, because we could make new lows, the Russell could flush, and with interest rates going up, I think even the S&P and the Nasdaq may start to look bearish. So anyway, that's my take on the markets and the banking stocks. Let's move on to interest rates, which, to be honest, are the most important thing, and it has been for the whole bear market, you could say. With certain periods where commodities shine and banking sectors take over, but I think interest rates have been the most important sector throughout. Look at this though, the 1 year, we pierced at new highs, 5.3%. Amazing. I didn't think we'd get there so fast, but I did think that would happen. Next move is just that it keeps going up until something breaks, and then people just pile into bonds, sell, the yields sell off. But that's usually indicative of something very bad happening, and I just expect there'll be another big bank. I say another big bank. I don't think we've had a big bank, Credit Suisse maybe, but yeah, okay, another Credit Suisse sized bank collapsing. I think that's what will come. So I expect yields to go up until we get something like that. Some days they'll level off a little bit, but by and large, just going up. So look at the 1 year completely, it's completed the retracement and now it's gone all the way back up to new highs. So let's see, does it retrace a little bit and then go back up? I don't know, but direction is definitely up. 2 year. Now, it's not going to do it in a straight line, but it's on its way up. I honestly, I'm surprised how fast these moves are coming. Can we get to 5%? Yes, we can. How long? I don't know. 1 or 2 weeks. But these moves are happening much quicker than I expect. Every time I say 5, 6, 7 trading days, it happens in 2 or 3. So it could just be like 4 trading days. It's incredible. If they retrace back down to support, prior resistance, and then back up again. 5-year, exactly the same as 2-year. 10-year, same thing. Yeah, we have a bit of a, it's not even a red day, it's just a sideways day, a breather. It could just keep going up. If we go down, back to prior resistance, see if it acts as support, which it will. The 30 has already reached this part. Okay, you can see resistance doing its thing. It's just taken a few days. And this would be significant if it starts to close and rise above 4%. 4% is a nice number. You can see it's failed here twice already. So the third time, this would give extra energy to the other yields. So I just see it as just going up until something fundamental changes in the temples of the central bank, the monetary policy changes, which it won't. So I think we just keep going up. Simple. And look at the EU yields. If you want extra reassurance, that's just going up too. How long until we get up here? 2.8%, or close above 2.8%. And if you have the EU yields, which is basically German yields, but let's just stick to the EU yields. If you used to have that closing at 2.8% and rising to 3%, that's alarm bells. That has to have an effect on the Japanese yields, okay, maybe not the Japanese, the British yields, the US yields, and then you've got the 30-year closing above 4. And then you've got the 1-year just closing and running above 5.3. You have certain yields of certain countries making new records. Everything just gets dragged. And that's what I think will happen. I think yields will start running, making new records, and just dragging each other up. And then eventually something goes wrong in a bank or several banks, not necessarily just in America. And then things start to crack, 2-3% drops in markets, maybe more. The Nasdaq completely, down 4%, one of those days. The banking stocks, big banks going down, the Russel, new lows in the bear market, Dow Jones looking horrible, the S&P just flushing. It's, these things can take 1 or 2 days, and then everyone realizes, oh my God, why was I buying? Why was I adding to Nvidia where it is? Why was I, buying Google, or why am I not in cash? So I just feel like yields are the answer to what happens next. Anyway, looking at the dollar seems to be following yields. Sorry, why have I got the drawing? Now, Friday, look, we've had quite a nice move up. We've closed above 103.5. That was the first target. And it was quite hard to find this level, but I'm quite happy with where I had my line. I think it was pretty accurate. But, we powered through. Now, I don't think we've reached a level here. I think the next level is 105. Now we have this very steep ascending support, which I'm going to just extend, but we're still within that ascending support, quite impressive. The Friday candle was, I'm not going to say a doji, for me, it was just a sideways day, but still quite bullish because look, we've had 2 very strong days and we tested the lows, but we closed near the highs. So for me, we're on schedule to keep marching up, a bit like rates. If we have a bit of a drop, a bit like rates, we could just retrace to the prior resistance, see if it acts as support. That's 103.5, and then go back up. And maybe there are a bit too many lines here, but I think they're all worthy lines. We could maybe delete some old ones, but what do I think might happen? I think we're going up there. I think if we drop, we just bounce here and then go up there. But I think once we reach this area here, that's the most important moment. I think we'll retrace, but do we retrace and break out, which would be extremely important, because if we start to close above this 106, then we really run to the next level. Or do we fail and go back down and never breach this descending? And then it's just another failed rally, a triple top, whatever, down we go. That part I'm not sure. But ignoring all that, beautiful, I think we go up next. So quite simple. I still think we go up. And even if we drop, we go right after. So I think the dollar is still not done with its ascent. But so far, it's quite impressive. But it's also expected. You take out this trend line, you're going to bounce a little bit. I think it will actually go back down, make new lows, but not yet. That's the dollar. Let's look at commodities. Copper, very strong move, very strong move. Okay, look, the markets were up, so that must have helped. The dollar was sort of sideways, so you can't say the dollar had too much of an effect. It bounced off this support just underneath ascending. It's lost its ascending. Now we're back in the ascending. Let's just see what happens, you know? Yeah, copper's a hard one. I mean, fundamentally, copper long term, just like uranium, just like gold and silver, needs to go up. I mean, not just the green, you know, the requirements for the green revolution. You need copper for everything, and copper. Starting a copper mine takes 10 years. There's this the supply demand, basically the supply demand picture for copper is so bullish long term. Like silver, like gold, like uranium, even like oil. So copper long term just really needs to rise, but you know, it hasn't had the strongest chart. It's been pretty hard to read, I must admit. And it's been quite weak for quite some time. It just hasn't been as strong as it should have been, I think. So I'm just gonna let it marinate. I'll let the chart marinate for now, but I'm very much aware that it's sensitive to market direction. And since I think the market's going down, I wouldn't be too bullish on copper in the short term. And you know, even gold and silver that I think are more likely to go up versus copper in the short term, even if the markets collapse. I still think they could go down. You know, liquidity events, people freak out and sell everything, even gold. So copper also. Anyway, let's see what happens. Again, I think it depends what the market does. Natural gas, this one, this one. You know, retrace the pop. Now it's starting to retrace a bit too much. I would find it very, very strange if it went all the way back down. That would be very rare. That would be very, very uncharacteristic of chart patterns for something to break out like this and just reverse all the way down. Normally that would be because of just news of the stock you're watching, you know, bad news. So it doesn't matter what sent it all the way up. Very bad news sends it all the way back down. But in this case, it's a commodity, and I don't know of any weather patterns. I don't follow the weather patterns, but yeah, I don't expect to go all the way back down. I expect to basically turn around from here. You know, it should just, I think it would have normally turned around the day before, like on Thursday would be the low, but look, on Friday we went down again, but we should just go up again. And this time, next time we go up, sideways at the top and then up again. I really expect us to start hitting 3. So I think it's retraced a bit too much. That's what I think. Obviously, where is it going? If it goes down back to absolute lows, maybe just before, maybe this zone, for example, you know, but I don't expect that to happen. Oil, just middle of the range, anything can happen. Do we have ascending support here if we really try? No, it's a bit too, that's looking for a trend line if even if there isn't one. I think you're in the middle of a channel and you just have to wait and see. So if you have a certain thesis and you're in, then just hold what you've got. I just stick with the trend lines, you know. I like this. I don't think there's any point in putting in some middle trend line. You've got the low ascending trend line, long term, totally credible. And then you have the one up here, which is a rough trend line. Let's call it 82. So if you really want to sell, then sell just below, you know, maybe even 79, just below 80. But I think we go towards the 80s if I had to guess, because long term, just like copper, you know, and uranium and gold and silver, long term bullish. Long term bullish oil. I think also the Saudis, Russians, you know, this alliance, they have an interest in seeing oil higher. And I think they are likely to get that. And also the Americans need to buy back their SPRs. And I'm not sure that we're going to get too much cheaper prices. If we start to go back down again, though, you could have an absolute almighty flush and see it underneath 60. That would be amazing to buy. So anyway, I'm not really in oil, so I'm just watching. But yeah, very interested. Uranium, this one has, a bit like natural gas, oversold its retracement. You can see on Friday, it started to bounce off the old ascending support, which I thought would no longer count after this pop. But after this failed second pop, we started to flush all the way back down to this ascending support. So now, by the way, now this is irrelevant. Now it's really a question of, do we close below this ascending line and therefore start to test the absolute strategic long-term ascending line? That would be very important. Look at that. If you start to close below that, now the chart looks a lot more, you know, it's a lot easier to read. If we start to close below this ascending line here, then we go back down to the lows here, and we probably bounce off that. But it's all about closing below this ascending. And then people like me who have not been in uranium and want to be for the long-term benefits get a chance to buy a massive flush. That would be amazing. I'd feel very sorry for the uranium bulls. I feel your pain. I've been in gold and silver for a long time, so I've had moments like this where the sector you're in, you know, long-term, all the fundamentals line up, but you get flushed on nonetheless. Now, it's really possible, you know, because also uranium could get smashed, should get smashed if the markets go down in a panic mode, which I think will happen. Otherwise, we bounce off this. The only two lines that count, you bounce off the ascending, which happened on Friday. You rise back up again, and then you close above this little 21 zone. You need this close above here. And to be honest, by the time that happens, let's be honest, it'll take a couple of days, even if it was a steep move. Let's say you close above this, little sideways, and you want to close above this ascending line. You've got to close above this ascending line. And it's just days away. You can see we're converging here, you know. I don't know how many trading days are in here. You could probably calculate it. There's one of these indicators that would show it, but you know, there's probably a month between now and a month from now, you're going to have a breakout or a breakdown. And you know what? I don't know. Fundamentally, this thing deserves to be just above 30, in the 40s, 100% from here. And that's the commodity. You know, if I go down and check URNM, the actual stocks, the equities, uranium equities, I mean, you know, that will be a leverage play. That'll be multiples of this. But despite thinking long-term uranium should go up, if the markets go down, and remember, they've moved up a lot, interest rates are going up, I think they could come down any moment. I really do. And I think they'll take uranium down with it. And I would love that. So, yeah, watch out for the move back down too. We should, to be honest, we should have at least 1 or 2 days bounce from here, though. This isn't a little overkill on the retracement. So, and this ascending has worked for quite a few days. So I expect a little bounce at least. But then actually, if the market flushes, I expect it to go down. Okay, gold and silver. Now, first of all, silver was up 2.5%. Gold was up not even half. That's pretty rare, I would say. It's happened before. I can't remember the last time, but I know it's happened before. Okay, well, look, first thing, gold did bounce off this ascending support. And I've had this line in there for some time. It doesn't surprise me that we found a bit of support here. Dollar wasn't up, so that kind of helps gold. Honestly, what do I think? I think we bounce from here, but I'm not sure if we hold. And I think it all kind of depends on the dollar and the markets, obviously. The dollar, I think, will go up a bit more. So I think gold is going to be stronger here than it was, you know, all the way over here. So even if the dollar goes up, I think gold will be relatively strong. But if the dollar goes up strong, like, you know, 1% up, the DXY is up 1%, sorry, but gold's going to go down. It will have a red moment. So it's all about whether gold can hold this ascending. Does it close below this ascending line? And let's just wait and see. Because the DXY doesn't have too much more to move before it hits like 106 zone. And there'll be a lot of resistance. There you want to buy gold because the dollar will retrace from there. But look, so far gold has held its ascending. It's held sort of 1940. For me, it was like 1935, 1937. This zone, the absolute low. We did hit 1937 on that day. Well, look, we don't have to be cute about $1 or $2. You know, you zoom out, you can see we held the ascending. So technically it did its job. How long does it hold? Silver, I said silver, I don't know where support is. It's hard to read. So I said silver, the support, I will base it on gold. So gold, there it was on the ascending. It's the most important out of all these trend lines for support. It held, and therefore silver held too. And now you can see silver really held. It had a massive day. Now, I didn't expect silver to outperform gold that much, but I am happy to see gold's trend line working for both metals. And then if I look at this, I think, does that make sense? Oh, look, there's a little tail here. Here it hit twice, and yeah, but I'm just searching. You can, you know, so I'm gonna stick with my thesis, which is gold provided silver with support. So let's look at the miners. You see the miners were weak. Again, silver up 2.5%. You'd expect at least the GDXJ to be up 2. It's not even up 1. So relative weakness in the miners, that's not great to see. Maybe they have to hit their ascending trend line, but they are trying to do a bit of a double bottom, but it's a weak one. I don't see any obvious trend line where they are either. So that might also contribute as to why they were weak. GDX, yeah, you know, I'd see no immediate trend line. I see one just above, which it failed. GDXJ, same thing. I see a trend line just above, which it failed. Bit stronger. GDXJ, look, higher low, you know, and it didn't close near its low of day. So I think GDXJ was outperformed, but you'd expect that. It's a green day. Silver's up 2.5%, still relatively weak. The one thing going for GDXJ is we're pretty close to this ascending support, but still, you know, relatively weak compared to the metals, especially silver. Silver was just a standout. I think silver just had a bit of a crazy day, but overall, gold and the miners still not enough for me. And when I go back and check out the DXY, I still see a bit more upside before it's going to find a lot of resistance. So maybe you need to judge everything off DXY and interest rates and the gold chart, you know. So I'm just in a wait and see moment. I'm not going to add to any miners. I'm going to wait until the DXY is done topping out. Then I'll add. So you'll know the day that happens. But really, what am I watching? I'm watching the Russel a lot. I'm watching the banking stocks a lot, but I'm definitely watching interest rates and the dollar. I'm watching those things. Then I'm watching gold, silver, and the mines. I mean, I've always got those charts up, but I got 2 screens with strong resolution, so I can watch, you know, multiple charts at once. I don't like to divide my focus because, you know, if you focus everywhere, you become a bit weak everywhere. But still, I think interest rate's the most important thing for sure. The dollar is one of the next most important things. The banking stocks, Nasdaq and Russell, those are what I'm watching the most. Then I'm watching, you know, gold, silver, and the miners. So yeah. Anyway, I hope that was helpful. I intend to do a video on my portfolio, which is taking a bit of a hit. I'm going to do that tomorrow because it's now 1 in the morning. Anyway, those are my thoughts on the markets this week.